home prices across the U.S. are hotter than ever. The Case-Shiller Home Price Index for April rose at its fastest rate ever, up nearly 15% year on year. Phoenix, San Diego, even Seattle posted the biggest gains, with prices in those cities surging more than 20%. And this is interesting as well. The FHFA index also rising at its fastest rate ever. In fact, faster than Case-Shiller, which typically covers just urban areas. FHFA says prices in the country were up nearly 16% year on year in the month. The Mid-Atlantic and mountain regions showing the largest increases. Is all of this sustainable? Well, joining me now is Ryan Gorman. He's the president and CEO of Coldwell Banker. Ryan, it's good to have you. It's hard to believe the market's so much hotter since just the last time that we spoke. What's going to happen with prices from here?
Well, it's anyone's guess where we go from here, but I'll tell you the fundamentals remain incredibly strong. So you're talking about some April numbers. There have even been some National Association Realtors sources in May numbers. Everything's very strong. We're really debating whether we're at the very high point or one step removed from that. The fundamentals, though, underwriting guidelines, cash offers, low speculation, low building, there's a lot of reasons to believe that there's going to continue to be a lot of buyers. Unfortunately, not enough sellers. We continue to have some inventory constraints, building slightly there, though.
You are echoing what we've heard from one of the top home builder analysts on the street, who in the past month or two has told us he sees no reason why prices couldn't go up in the range of 30% year on year. I mean, do you think we could get to price gains that steep?
I think that's a tall order. That would certainly be about doubling some all-time peaks. However, if you're speaking to new home construction, that is a subset of these overall existing home numbers that you're quoting from Case-Shiller and from National Association of Realtors. So some of the new construction inventory, it's highly sought after. A lot of builders have even looked at shutting down their sales centers because, frankly, they don't have enough to deliver, whether there's lumber shortage, labor shortage, or land just can't get ready quickly enough. So on the new construction side, I don't know, he may be right. On the existing home side, I'd be shocked if we hit those kind of numbers, but I think demand will remain very strong.
Even if it stays where we are, we go through another year of this, it's going to be a 30% increase over 2 years, which it's still just a sort of a shocking amount. I want to ask you about an issue I hear more and more concern about, which is the role of investors in the market and the extent to which they're driving up prices or elbowing out other buyers. In fact, Peter Bookvar, an economist and market strategist, spoke to this in his note today, where he said, it's the private equity yield grab that's in full force, and the first-time buyer, in his words, is getting screwed here. How much competition do you see from buyers like these, from investors in the housing market?
Well, certainly, like your last guest was mentioning, that housing and real estate in general is a bit of an inflation hedge. There's certainly a lot of money flowing toward that. So you would think that with a lot of this institutional capital flowing into it, that some buyers will be squeezed out. I will say today, though, it's a very, very small percentage of the overall market. Yes, cash offers are very high. The vast majority of cash offers, even in multiple offer situations, are coming from individuals who are looking to occupy the home and own the home just as they would any other. So institutional buyers, I think, are going to continue to grow. Money's going to continue to flow into that category, as well it should. And the multifamily category is very strong and has been for a long time. I think single-family rental will continue to be strong. In terms of impact on the overall market, though, we're talking about percentage points, low single digits at this point, with some markets trending a little bit higher than that. So something to watch, but not as concerning as it might sound.
Interesting. Well, and good to hear your perspective, because I know obviously you guys are right there on the ground where people are battling it out over these properties. So final question, to circle back to a point you made, is that, there's not enough homes for sale. I don't know if this is quite the way to put it, but how do you kind of cajole, coax, convince, whatever it, I hear these anecdotes about people writing letters to homeowners asking them if they would consider listing their house, not even just homeowners who've already put their homes on the market. How do you get more supply onto a market where the people who, I guess, could be sellers feel like they don't want to sell and they don't really have any place they want to go?
Certainly, additional inventory is the solution to all that ails us at this moment. Now, we talk about manufacturing inventory two ways. New home construction, which is lagging way behind where we need it to be. And despite high builder confidence, it's going to continue to lag. We're missing 4 to 6 million homes that we need today. But on the existing home side, the biggest draw into the markets today is really price increases. Existing homeowners finding out what their home is currently worth, meeting with an agent, hopefully a Coldwell Banker agent, finding out what the value of their home is, and then realizing they could sell and move forward in their life. That's going to draw the most inventory on. In our Coldwell Banker survey a few months ago, for what was keeping the 20% or so of existing homeowners off the market who were contemplating selling, COVID was a very, very big concern. Almost 40% of those homeowners. With vaccines prevalent across the country now, we're seeing those folks edge onto the market, and hopefully that's going to continue to build that inventory. Still a seller's market, but we'd like to build that inventory.
Shepard Smith here. Thanks for watching CNBC on YouTube.